What's up, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some analysis into Ally Financial and Sofi. So today, I sold my position of Sofi at a pretty big loss, and I put the money into Ally Financial. And today, we're going to compare those two stocks, and we are going to find out what my thinking is behind that. So they're both pretty similar companies. Ally's a little bit older. They have more people on their platform, but Ally is really just an all digital bank. And if we check out their website here, we can see they do banking, investing, and loans. And then Sofi is pretty similar. It's banking, investing, loans, stuff like that. So they're pretty much a similar business model, but Sofi is an unprofitable company. Ally is a very profitable company, and we're going to compare the margins and all that stuff. But so Ally is a $25 stock. Last summer, it peaked out at $55. And so now it's been, cut in half. And then if we look at Sofi, we can see here that Sofi has also had a rough year. On the year, it's down 77%. Not very good. So my cost basis, I bought Sofi right around, I think $13. Yeah, I bought Sofi at $13. And, a year ago, that seemed like a good deal. But today it's $5, not so much of a good deal. So part of my thinking going into this is that, so Sofi is a money-losing company. Okay, we can look at the comparisons here. And Ally is a profitable company. So if we look at the trailing 12 months, Sofi lost $400 million. Ally did over $2 billion of net income. So that's my first reasoning behind this, is that now that interest rates are going up, it's not the best time to be an unprofitable company. Therefore, I'm going to be favoring Ally a little bit more. The other thing here is that I think Ally is a safer investment, and they also pay a very good dividend. If we look at Ally's dividend, we can see here that their dividend yield is 4.7, which is very respectable. So Ally is a $7.5 billion company. Sofi is a $5 billion company. Pretty similar valuations for two totally different companies financially. Now, if we look at the price to sales, we can see Ally trades at a 0.9. Sofi trades at a 2.4. Of course, Sofi is going to trade. It should be trading a little bit at a higher premium because they are a faster growing company. If we look at their growth rates, we can see in the last 3 years, their average revenue growth was 55% compared to Ally's 16%. And then the amount of equity they have on their balance sheet, the 3-year average, it's grown 8% for Ally every year, and Sofi has grown their equity on average 41% per year. So they are a much faster growing company. And if you look at their numbers, they're doing a great job with adding more people on the platform and all that stuff. The other factor about both of this business model here is that, remember, there's that the student loan forgiveness is something that's happened recently that is going to affect their business models, because part of their business is giving out loans, right? So that was another factor here. But if we look at their gross margins, so 77% gross margin is very good for Sofi, right? But look at Ally's, it's 96%. That is not very often you see a gross margin that high. This column right here is very important to me. I believe this is often very underlooked, and this is the number of shares they issued or bought back in a given year. So in the past year, Ally has taken off 13% of their shares and decreased their share count by 13%. That is very good, because that's going to push the stock price up. That's what we want to see. Sofi, on the other hand, has increased their share count by 150%, diluting shareholders a lot. So even at the same valuation, the stock's only going to be worth, less than half of what it was last year. So for it to get back to where it was, it has a lot of work to do. Then we have trailing 12-month income. Again, $2 billion for Ally. I mean, look at, they're doing over $2 billion of income, and it's only a $7 billion company. So the PE ratio is only trading at like a 4 right now. Sofi, once again, they're a money-losing company. And if we look at revenue, again, they're doing $9 billion of revenue, and the valuation is only $7.5 billion. Sofi has great revenue numbers, $1.4 billion, and they've been growing that really fast every single year. And it's a $5 billion company. Users, we have over 10 million users for Ally and a little bit under 5 million for SoFi. Then we have the revenue growth, of course, and then we have price to book. I like looking at price to book too, just because it's good to know how much equity they have in their balance sheets. The balance sheet is another thing you want to pay attention to right now in the time period we're in with high interest rates. You don't want them to have a lot of debt, right? So Ally trading at a price to book of 0.5 looks very cheap to me. SoFi at a 0.8 also looks pretty cheap, especially for how fast they're growing it. And then these numbers here, you can see if you want to see year by year, this is how much they grew revenue. So 2021, they grew it by 73%. The year prior, 28%. The year prior, 64%. Now, Ally is also a little bit older of a company. That's why they've been around a little bit longer. Therefore, they don't have that, those fresh big growth numbers that SoFi has. But once again, it's definitely respectable. They definitely are both at cheap valuations. I'm just really more attracted to Ally. The other thing to bring up here is that Warren Buffett invested $1 billion in this company a couple months ago, and he bought in when it was $33 a share. So right here, at some point probably in late July, he purchased $1 billion, which is about 13-14% of this company at $33 a share. I bought in today at $25, so I'm getting it much cheaper. And I mean, look how long. I mean, it was sitting at this price range back in 2017. And so I'm very comfortable putting my money here. Once again, the dividend yield is very, very nice at 4.7%, and the PE is only at 4.2. So that is my reasoning behind switching out of SoFi into Ally. I think SoFi has a good future ahead of it. It's just I feel more comfortable putting my money in Ally because it looks like a safer place. They have a great dividend, and they're not a money-losing company. But either company I can see as a good investment. So thank you for watching, and I'll see you in the next video.